The whole concept of self-custody is very important for individuals, those that are capable, of self-custodying. It's fantastic. But there is no real concept of self-custody when it comes to a pension fund. The board of trustees of that fund, even if they have a 7 of 12 multi-sig and they've set it up and they're self-custodying the Bitcoin, ultimately they're custodying it for you.
Hey guys, welcome back to the show. Today we have an amazing guest, co-founder of Apollo Sats, Thomas. How are you doing today?
I'm doing great. Yeah, happy to be here.
Thank you so much for doing this with me. I really appreciate it. But for those of whom they don't know you, do you mind to give us an intro and tell us a little bit about yourself?
I've been involved in Bitcoin for, well, I guess a decade ago roughly is when I first came across it. I was actually doing an internship in a central bank in Australia. I studied economics. I was interested in economics, interested in finance. Came across Bitcoin. It was this pretty revolutionary thing. In 2022, co-founded Apollo. What we wanted to really focus on, particularly after the kind of big crashes that was happening in 2022, and really just a loss of trust in the system entirely, really, was a way to kind of shine a spotlight on the actual better products and services in Bitcoin. That was essentially the genesis of Apollo. And as it's developed, we've kind of started to focus more and more, particularly this year, on the ETFs, because that's kind of the big story of 2024. And that's really where I see most of the adoption happening right now, which is like, that's the big story in Bitcoin. It's kind of embedding itself into the traditional financial system and allowing these institutions that have been kind of locked out of Bitcoin, maybe interested, but not having the ability to access Bitcoin, allowing them an opportunity to invest in it and obviously take their massive amounts of capital and invest in it. And that's why it's really interesting. We have a daily newsletter, which is what we're doing, which is focused on kind of Bitcoin flows, or really all of the flows affecting the Bitcoin market, primarily focused on ETF flows, but not entirely, because there's a lot of interesting stuff that's happening. Right now as we record this, you've got in the last couple of weeks, obviously you've had situations like Mt. Gox distribution or Germany selling their Bitcoin. There's a lot of interesting stuff happening in the market. And I think that's, this is the kind of stuff we like to focus on, just like, what's happening.
Love it. And by the way, I do have a live show and your Twitter account is always there with data or inflows. So thank you so much for all the contribution. And guys, in the comments down below, of course, I'm going to link Thomas' Twitter account. One of my favorites, by the way. You touched on ETF. Okay, so I've spoken with a couple of guests not long ago, and in the comments, people have gone bananas because some people are saying, well, ETFs, they're going against what Bitcoin was made for, and not your keys, not your coins, and yada, yada, yada. And I've been trying politely to reply to everyone, so maybe we can use this conversation to see also where you stay, because in my book, ETFs are awesome. Like, Bitcoin has many properties in my view, and one of them is self-custody, but it's not necessarily the only thing. So this asset is beautiful in so many different ways. And if someone doesn't want to have the responsibilities of owning the asset itself, they can go through a third party, a custodian. Effectively, it's a service, right? But I wanted to ask you, like, do you see the ETF coming in and disrupting these assets? And do you see them as a bad thing? What's your view here?
Well, look, actually, I think it's a tremendously positive thing. The reason why is because it gives a way for institutions to access Bitcoin. The whole concept of self-custody is very important for individuals, those that are capable, of self-custodying. It's fantastic. But there is no real concept of self-custody when it comes to a pension fund investing in Bitcoin. It's not really a thing. If you are a pensioner, you can't self-custody. Even if you're, the board of trustees of that fund, even if they have a 7 of 12 multi-sig and they've set it up and they're self-custodying the Bitcoin, ultimately they're custodying it for you. The reality is that if my pension fund is investing it in it, it doesn't matter. There is no concept of self-custody for institutional capital. It's kind of a non sequitur. Realistically, you have to have a custody of custodian of the Bitcoin if it's for a group of people, an institution investing in Bitcoin. And it's very important we can get this institutional capital, because the reality is that most of the capital in this world is in institutions. So it's fine for individuals to want to hold Bitcoin themselves. But if we want to get institutions involved, there's no real difference whether they use a custodian or custody it themselves. Because at the end of the day, it's all custodial Bitcoin from the end investor's point of view. And the thing that I would say as well is that Bitcoin, as you pointed out, Bitcoin has a lot of properties that make it great. And one is this kind of self-custody sovereignty angle, which is incredibly important, but it's not the only important property. I would argue for a lot of investors, it's the investment attributes. It's this store of value property. It's the fact that it's a diversified investment from stocks and bonds, and the fact that it has tremendous returns historically and expected returns, and it's got a fantastic Sharpe ratio, and it operates really well within a portfolio, protect you from money printing and inflation. These are all really value properties that institutions get access to now that they previously just couldn't, because it was technically difficult for them to access without these ETFs. So I would say that they're just a wonderful service for people that need it. Somebody custodying in Bitcoin or using an ETF, it just doesn't hurt somebody else that wants to use it themselves. I could see, by the way, I am open to the argument that ETFs can be problematic for, say, a proof of stake protocol like Ethereum, because in a proof of stake system, the owner of the crypto has control, has an actual control of the network. So you wouldn't want to see a situation in Ethereum where you had custodians that build up an enormous ownership of the ether, and then they actually get to control who transacts within the network. That's how a proof of stake system works. But in a proof of work system, it actually matters. It's completely inconsequential who else owns the Bitcoin. They can't stop me transacting it. They can't stop me holding it. They can't print more Bitcoin. They actually have no control over it. That's what makes the proof of work system so powerful, because it doesn't matter how much you own of it. You have no actual additional control over the network. The other thing I would just say fundamentally is that if Bitcoin could be corrupted by an ETF, then what are we doing here? Because then that's the easiest attack vector. If Bitcoin could be destroyed by an ETF, then we've all been LARPing for 15 years, pretending like this can actually exist. If it's so easy to destroy the network, then it's already going to happen anyway. Just to sort of steelman the argument against what I'm saying, there is a question of paper Bitcoin and people that price manipulation, essentially. What I would say to that is, well, that's no different than the exchanges we've already been living with for years. I mean, Binance has held hundreds of thousands of coins for a very long time. There's no difference so far giving institutions access to Coinbase versus having retail access to Coinbase. Paper Bitcoin has been problematic when it comes to actors like FTX in the past. We all saw that. That was certainly an issue. But Coinbase is publicly traded, audited institution. They don't want to go to prison, right? The people working it, they don't want to go to prison. You are going to be having this kind of potential issue about paper Bitcoin, but this is not anything that's new. And in fact, I would say it's actually much better than where we were. It's an evolution from where we were 4 years ago when we had Binance and FTX and it was completely wild, wild west. And you actually did have these problems. The actual probability as an investor that there are kind of paper Bitcoin being market manipulation is much lower when it's in these institutions like BlackRock and Coinbase. So look, it's not a concern. It's not a concern for me. And if you do think there's kind of market manipulation to suppress the Bitcoin price, well, I would say then you should probably be taking advantage of that and actually buying Bitcoin and putting it, storing it in self-custody. If that's what you really think, I don't actually think that's happening, but that would be my response.
There is a clear division between the asset itself and how we store it, how we access it, right? And who are we to forbid institutions to have access to the best money ever made? Like you said, if this would have been, quote, bad, that means Bitcoin is not the money we want because it's supposed to be accessible for everybody. Of course, there is a degree of trust into anything. If you have a Trezor or a Ledger, isn't that trust in Ledger or Trezor itself? If you self-custody with 12 words, you have to trust in yourself, in the network, in the nodes, in the miners. Like, we cannot remove those things of the equation. And I think if we really indeed want adoption, well then, how can you take off the equation the big money or the big institutions with big capital? Sorry, for me, Bitcoin is money, but the big fiat institutions, they want to store capital into it. So we've seen what happened in the past few months. And some ETFs, by the way, like Bitwise has a Bitcoin address, and you can actually go and see where the funds are. Love that, by the way. I had Matt Hogan, CIO, Bitwise, and I told him, like, guys, super well played. This is how you show you are integrating Bitcoin, in my opinion, because you are showing don't trust, verify. Here's the address, and you can see where the money are. And the funny thing is people have started to send money, and I think it's the only over-collateralized address because people have started sending money to say, hey, it's a good thing. Where do you see Bitcoin, though? Like, some people are saying it's a store of value, it's a currency. What's your take? Where do you see it coming in handy?
Well, I would say that in 2024, it's a store of value. Whether or not it becomes a currency in the future, it's a political question. It's a political and technological question. Political because in a lot of places around the world, you're going to get taxed if you actually spend your Bitcoin. That in itself is a major deterrent in actually using it as a currency. We also see Bitcoin has its, challenges, and I'm a staunch Bitcoin proponent, but the reality is that it can't operate as a currency for everyone on layer one because the fees get too expensive, and we've seen that over the last year many times throughout. It'll cost you $50, $100 to try and more actually to send a Bitcoin transaction. It's not something that can happen on layer one, and then you might say, well, there are these layer twos out there like Lightning Network, which certainly offer potential, but the adoption isn't there yet to really be certain that that's kind of the future. So I could see it going a lot of different ways. I do think that Bitcoin has the potential to be the kind of currency or money of the future, but the reality is that just the store of value properties alone make it like an amazing investment asset for 2024. And certainly when you look at the big capital coming in, if you're a pension fund, if you're a sovereign wealth fund, if you're a insurance fund, you're not buying it because you need currency. You're buying it for its as an investable asset, not as a dollar alternative, but as a slice, like as an alternative to the equity market. Really, Bitcoin is competing with Tesla and Nvidia. It's competing with them more than it's competing with the dollar. I think in the kind of eyes of actual potential capital today, and I think that's what matters. Where it goes in 10 years, 20 years, 50 years, who knows? I would hope that I expect that the technology will allow us to develop a kind of these layer two that allow us to actually transact in it. And I suspect what we will see is politically it gets easier to use it over time because politicians around the world are starting to actually get, I guess, pressured to have a kind of a Bitcoin position. And there is essentially this kind of asymmetry where Bitcoin is, we kind of have this kind of minority principle that really benefits us because we care about Bitcoin much more than the people that are not Bitcoiners don't dislike Bitcoin. You see what I'm getting at there, where people that are really interested in Bitcoin will vote for Bitcoin. But if you don't care about Bitcoin, you will just not vote on the issue. And so it creates a very powerful bloc that's actually incredibly persuasive and powerful within democracies. And we're seeing that, now where someone like Trump is taking a very pro-Bitcoin position because, it's a smart thing for him to do. You're going to win votes that way, but how many votes are you going to lose? You're not going to, nobody's voting sort of against Bitcoin. It's just not a real position out there. Or another way of saying this is that there is no constituency for a kind of fiat maximalist position. There's nobody out there that feels that way. Not realistically. It's a very dumb tactic to go down that path for a politician. And so game theory would suggest that people are just not going to do that. So I do think that Bitcoin will become more viable within kind of these sort of democratic institutional countries going forward, and that might mean changes to the tax code to make it easier to transact in. We are sort of seeing, for example, in Argentina, Milei is saying he kind of wants to open up currency competition and let the best currency win. And so this sort of stuff might happen going forward, but for now, 2024, where I see Bitcoin is, hey, it's just an incredible investment opportunity, incredible investment asset for the majority of people.
I always do this kind of connection in between where Bitcoin is now and where internet was in the early 90s, which, there was a bunch of protocols, HTTP, FTP, IRC, and then a few years later, boom, you have a bunch of services. Hence why I think, I agree with you, there's also the time limit. It takes up to 10 minutes for a transaction. Imagine going to a coffee shop and paying Bitcoin and wait in the corner until the transaction goes through. So it's not actually quite there yet, but it's going to be an ecosystem that's going to allow people and companies and developers to build on top of this beautiful layer 1 or layer 0, depending on how you see it, and just build services and companies. So hence why I think we have an opportunity to go in before it gets accessible to everybody, it gets used by mass populations. The price is going to be much higher because the more people are going to use the network, the network should be valuable by the number of users, right? So more people are in the network, the more network is valuable. So now we have 2 or 3% adoption, which means Bitcoin stays at whatever, 60,000, even though we've gone a little bit under, but who cares? One Bitcoin is one Bitcoin, right? So we don't look that.
I like to think about starting from the perspective of, and this is like outside of Bitcoin or outside of any of this, it's like, what are the big kind of problems happening that I see in society right now? And I would say people aren't really having kids. Young people aren't really having kids. The birth rate's falling. And why is that? There's a massive amount of economic insecurity. And why is that? Because in the last 30 years, really, basically on this kind of fiat standard, as you outlined, this sort of the change that happened in 1971, we've seen a massive increase in the money supply, which has consequently driven up a massive increase in houses. So housing has become the sort of store of value asset for all of the world. I mean, about a third of the world's wealth is stored in houses. It's about 300 trillion. And the problem is that housing is meant to be for like shelter for people to raise a family within. Like that's the utility of a home. But what's happening right now is it's serving a dual purpose. It's serving, it's utility for a home for people to, I've got a home, I can start a family. But it's also, I got some money and I need to store it. I want to store it for decades to come. And I can't keep it in cash because that's going to be just debased to worthless. So I've got to put it somewhere. And until Bitcoin came along, there was no better place to put it than property. And so that's what people did. So you've got this massive housing has become this kind of store of value asset for the entire, basically an entire generation of boomers and subsequent generations that have stored all their wealth in property. And we've seen this massive rise in the cost of housing, and it has all these kind of detrimental effects on the world. Said people aren't having kids, people are economically insecure. It has all these kind of downstream negative effects on the world, and it all stems from the fact that housing is essentially unaffordable for anybody that's in their 20s, 30s, you look at it, you look at the average income that it takes to buy a home, it's skyrocketed. It's just skyrocketed. I mean, in Australia, which is where I am, 30 years ago, it took about 3 years of a teacher's salary to buy a house. And I'm trying to use like a teacher's salary because that's a very kind of, well, it's supposed to be kind of just a real nice middle income type of salary. Nowadays, it will take you, it's more like the average home's more like 15 years of a teacher's average salary. And then, of course, you're buying further out too. You know, it's 15 years, but also you're in a worse location as well. And the point is that we've become so much poorer, frankly. And it's like, why is that? Why is that? Well, you get a situation where the money is being debased at a rapid rate, and people are storing their wealth in housing. And I just think that's a terrible outcome for all of society, really. And wouldn't it be better if we had a asset that we could store our value in reliably, that couldn't be just printed to oblivion, which is why the housing is so valuable. Tony Soprano said, you know, giving advice to his son 20 years ago, well, they're not making any more land. It's only sort of true, but it's certainly true for Bitcoin, or at least there's only 21 million. So that's why Bitcoin is so valuable, because it can serve as this kind of replacement for housing. And so we can fix a lot of society's problems. And we're just going to store our value in Bitcoin. Bitcoin monetizes, but there's no, you know, in economics, you'd call it an externality. Right now, there's a massive negative externality when society is storing its wealth in houses. Let's fix that. Let's store our wealth in Bitcoin and then make housing available for the masses of the population. And, you know, you just have nobody is hurt by a rise in Bitcoin price. Actually, everybody just gets wealthier because you've got a tremendous store of value that has these actual sort of positive externalities. And we can talk about that as well with relation to energy production and all these sort of things. But the point is that it fixed the massive negative externality of housing and enables people to have a kind of store of value that can be protected from government debasement, or not just government debasement, but debasement of currency that comes through non-governments when they, you know, banks, when they make loans and they print money essentially. So that's where it came from. It came from, I guess, my interest in Bitcoin only came through a general sense of curiosity about how does our like traditional financial economic system work. And then when I started to understand and, you know, caught the bug essentially watching it. And I realized, like, the thing is that at a certain point along the way, I came to the conclusion that Bitcoin, it doesn't even matter how you feel. I do think there's a lot of wonderful things about it. But at the end of the day, it's going up. Like, you know, you can either be a part of it or not be a part of it, but you might as well, because Bitcoin is just going up forever. It's a deflationary currency. And why wouldn't you want to be a part of it when you realize that it's the inevitable result of a deflationary system versus an inflationary system? It's just a guarantee that Bitcoin is going up. And, you know, as you mentioned, it has this kind of funny property to it that, well, like a lot of investments, but particularly the case with Bitcoin because it's so new, that the earlier you invest in it, the better, the better off you are. Ultimately, it doesn't matter in the sense of as a store of value, whether it's now or in 10 years' time, when you get when you make money in your job, if you're making, you know, fiat money, you're going to want to invest it in Bitcoin. I'm buying Bitcoin in 2024. I was buying Bitcoin, you know, 5 years ago, but I'm like, what am I going to do with fiat money today? I'm going to buy Bitcoin with it because it's the same in 5 years' time too. Like, at what point does it become smarter to keep your money in cash versus Bitcoin? The reality is at no point. That's the kind of conclusion that I came to. So look, I have multiple layers to this where I go, I think it's inevitable, but I also think it's I also think it's for the better of society. So it's like a wonderful combination of both, really. So that's why I'm just like, oh, got to be involved in this.
I love it. And by the way, sometimes we forget how bad it is for other places. Like, for instance, you mentioned Australia. You can think about Europe, US, of course, which is the world reserve currency. But there are places like Turkey where inflation has been extremely high. So we're not talking about 10, 20%. We're talking about like 80, 90% inflation, which means your money on the bank account become completely worthless. The whole thing has gone completely out of control. And to pretend that the amount of money that you store in a property in 10 or 20 years is not going to go as high, because how much are going to be worth in 10 years? Millions of dollars? Like, it's not going to happen. So money have to go somewhere else. I think, again, this is my opinion. Some people might disagree. That's fine. Everyone has his own opinion. So then what it is that you have? Well, you have a bunch of assets you can buy. You can buy watches, you can buy gold, you can buy whatever, old cars, whatever, as art, you can draw down things, but then you have to store them. I mean, imagine owning, even a couple of $100,000 in gold. Like, well, first of all, it's not in your hands because someone else has it, so you can access it. Then good luck in moving it. Like, imagine moving from London to Dubai with a bunch of gold. You can't just go to the airport with bags and say, hey guys, check in custom. Yeah, I got a couple $100,000 of gold. It's not going to work like this. So at the end of the day, what is that you have, right? I think having a small percentage of fiat can come handy, because you need to, at the end of the day, do small things, small transactions, and pay whatever you need to buy on a daily basis. But that should be, or at least in my life, it's a very much well-planned amount that I need to do my kind of living, depending on if I'm in Dubai, I'll have dirham, dollars, euros, or Australian dollars, whatever it is that you need to use as a currency. But what do you want to save? Your sweat equity, right? So then when you list everything down, I don't think there's anything better than Bitcoin. I can't, and I've been trying to answer the questions for 11 years and I cannot find anything else. So then who cares if we're going down to $40,000 from 70? I'm not bothered anymore, because I know that in the long term, in 2 or 3 cycles, 12 years, I strongly believe we won't have a $50,000 Bitcoin.
Well, it's the best investable asset, I believe. So from, it's just, I guess, multiple levels, but even just on as an asymmetric investment, when I think about what the, as you said, Bitcoin price, whatever, close to 60,000 today, where is it going to be in 5 years? It's a little unclear, but in my opinion, it could be, or I would expect it to be, probably an order of magnitude higher. If you told me it was 300,000, or you told me it was 1 million, I'll believe you. Maybe it's, follows this kind of like a power law model, or some of these other models out there. Maybe it's a little bit like less aggressive in its growth. But the point is that it's not, there's no kind of, I guess what I would say is, on a long-term basis, I don't see it doing anything but going up. Fundamentally, there's a limited amount of Bitcoin, there's an infinite amount of dollars, and the dollar amount is growing very, very rapidly. And I think one of the things that people maybe get stuck on, or they don't understand, is this concept of inflation. And I say that is particularly important because, like, if you believed kind of inflation was 2%, you might be less concerned about it. But I don't believe that. Or, and I'm not talking about today's CPI. I'm talking about in general. Like, the obvious way to understand this is think about unemployment. All right, half the people in the US don't have a job. Oh, what's the unemployment? Oh, 3.2%. Like, what? Half the people don't have a job, but the unemployment is 3.2%. Okay, well, it's this exact same thing for inflation. There's massive amounts of inflation, and then it's like, what's the inflation rate? Oh, yeah, it's 2.3%. It's like, what? Okay, whatever. You want to look at this constructed basket of goods in which you decide what's in it, and you pick and you choose and you move it around, and you don't include houses and you don't include assets and all this kind of stuff. That's fine. Play whatever, bullshit games you want to play, but that's not inflation. That's not relevant to me. What I care about is, how much money is being created. And I know that, I have my own kind of expectations about what that is, well, what that has been historically and what that will be going forward. And I fully expect that the kind of monetary inflation is probably going to be closer to 15% going forward for the next decade. So if you have 15% inflation and other people are going to figure that out, there are people who already are figuring it out. A lot of people know this, right? I'm not the first person to figure this out. But the point is, a lot of people are figuring this out. When they do, they're going to go, I got to protect myself from that. And what's the best investable asset? Well, what about an asset that, when the price rises, nobody can create more of? Like that's a very attractive investable asset. And so, and we talked about earlier, as you rightly pointed out, that the network gets stronger with the more people that join it, but it's not just per person. The reality is that Bitcoin goes up in jumps because not every individual person is worth the same. Bitcoin today is 60,000 versus 30,000 a year ago. And you could make a case a lot of that has been because Larry Fink was orange pilled. And one person being orange pilled, okay, now he's got control of BlackRock. Now he's going to make Bitcoin a centerpiece of BlackRock's asset accumulation strategy. And so, really focusing on pushing and marketing his Bitcoin ETF. And now it's the most successful ETF launch of all time. And they picked up 15 billion in assets in 6 months. So what we see is that we don't know, like, this is going to be completely non-linear. Someone like Michael Dell, he's come out and posting about Bitcoin tweets recently. Well, this man has $100 billion. What's going to happen when he decides, and I'm sure he owns a good amount of Bitcoin already, but what happens when a lot of people come to the conclusion that I actually want to store most of my wealth in Bitcoin? What happens when he decides to put $25 billion in Bitcoin? You know what I mean? Bitcoin is not linear in that sense. Bitcoin can go from 60,000 to 200,000. That could happen in a quarter. Like I really believe that. These things are not. It's not going to be kind of this sort of stable linear growth. It's going to be completely non-linear. It's very hard to predict, but I have a very strong conviction that as a store of value, there's nothing better in it because of its properties. And so more people are going to figure that out and more capital is going to figure that out. And all of the infrastructure is in place, like these ETFs, to enable this sort of injection of capital from institutions or from people like Michael Dell. So I just see it just growing and growing over time. And so I think that's why it's so attractive.
I call it CPI, by the way, instead of CPI. And you can just measure how much groceries you can get. And like you said, I also strongly believe that this thing is going to go higher. So that's when people ask me, hey, where do you see Bitcoin going in 10 years? Higher. That's it. I know it's very boring because people want numbers, 100,000, 200,000. But the reality is I don't care because I know the fiat is going lower. So I'm protecting myself. And like you pointed out so well, if we are fighting a 15% a year, well, then to stay where you are, you have to make at least 15%. Otherwise, you're losing money. So then, okay, well, then becomes a chess game. What do I buy? Where do I invest? And then it's up to you, of course, to figure it out which one works best for you, depending on so many variables, your age, where do you live, if you have a family, if you have kids, so many variables. But I think it's definitely worth at least looking into this asset because I think it's going to be, like we are discussing, it's going to be much more broader adopted, which means it's going to be well more distributed, well more secured, well more decentralized, right? I wanted to ask you, because you mentioned Ethereum, do you have any other asset in your portfolio like altcoins, Ethereum, or you just focus on Bitcoin?
Look, I just focus on Bitcoin, and the reason why is because I just see Bitcoin as being a superior investment asset. I don't want to. I'm not going to criticize. Like, I'm perfectly. If somebody came to me and I had this kind of way of trading crypto to get more Bitcoin, I would I'd love to do that. But the truth is that when I look at it and I go, oh, ETFs are going to come in and buy 100 billion in Bitcoin in the next 2 years, and I believe that. So it's like, what asset should I own? I should own Bitcoin. You know, what's the best investment asset? I believe it's Bitcoin. There will be cryptos that outperform in the short run, but it's very hard to predict that. And the problem is that I've been in this game a while, and the biggest thing I would say is like, you just don't die. Like, don't die. And because the reality is that there are bear markets, you don't see them coming either. And so if you look at you just look at the last 3 months, we've seen, you know, Bitcoin is down 25% off its all-time high. And, you know, if Bitcoin is all your unit of account, maybe you don't care. I care. I feel it. Like I look at the price. I'll be honest. Like I feel that. But what I don't want is, I don't want to lose 75% of my, which is what a lot of sort of altcoins have experienced. And so the problem is that I just see them as kind of inferior investments. Like I'm totally, you know, I'm always happy to talk to crypto people, because I go chase your bags. I got no sort of issue with it. Honestly, I really don't care. But I don't do it because I think that the best way, you know, that's how you lose Bitcoin, I guess, is that's been my observation from a lot of people over the years. And particularly, I would say, if you are going to trade, it's really important to keep Bitcoin as a unit of account. Because I know a lot of people, you know, friends or whatever, trading crypto, and they look at their portfolio and it's up, it goes up and it goes down and it goes up, and come to me at the end of last year, my portfolio is up 75%. It's like, yeah, but Bitcoin is up 150%. Like, you just lost a lot of Bitcoin. And that's the problem. And you can have a hard time believing you can outperform it over a long enough period. You might get lucky over like a short run, but it's just not the game I want to play, to be honest. Thought I had an edge, maybe I would do it, but you know, I don't want to be buying a dog coin hoping it's going to go up, and then watching it crash and going, well, what do I do now? Because that's the other thing, is that fundamentally the reason why, like, you have to be, in order to actually like get really good returns, from my observation, is that you have to be able to hold through really tough stuff. Like, you know, in 2022, that was a very tough crash. But if you really believe in Bitcoin, if you're absolutely certain about Bitcoin's future, you can hold with conviction, because you know where Bitcoin is going long run. How could you believe in anything at the end of, you know, if you've been like, you've got some dog coin, you're going to sell it you're going to panic. That's the problem with the emotions, is that you're going to panic sell when you have a pullback. And every bull market has these pullbacks along the way. So that's the thing. How do you know when to hold and when to? I don't know. I just don't get it. So all the kind of like totally impressed with anybody that has the kind of you know, skills to trade crypto to earn more Bitcoin, like gold. You know, that's awesome. But I don't do that. No.
The reality is most people are going to lose most of the money, because, no financial advice, but the most simple thing you can do is buy dollar cost average on Bitcoin consistently. You'll be fine. This is what Michael Saylor is doing, by the way. There is even saylortracker.com. You can see when they're buying, and is up. Now, as soon as you start not purchasing Satoshis or Bitcoin, this is where it gets tricky, because like you said, it depends on how do you compare it with. So I was talking to a friend not long ago, and she's a fantastic meme trader, whatever. And she was like, oh, I'm up. Yeah, okay. But if you compare, because you're using dollars as a meter of exchange, but if you put Bitcoin to the equation, everything changes. Because out of a sudden, people only see, oh, but Bitcoin can do 3-4x from here. I buy a dog coin, I do 1,000x. Well, first of all, that's not you. That's an exception. And you, sadly, are not going to be the guy, because you're going to most likely buy a meme who's going to zero, because you're buying the exit liquidity of someone else. That's how it works. But I think sometimes, you know what, sometimes you got to go through, because I can tell the child not to touch the fire, but until they touch it themselves, they won't get it. So I'm like, you know what? You want to play with memes? please be my guest. Just the only thing I'm asking for whoever is watching or listening, just make sure you have a small percentage of your portfolio allocated to the gambling. Like you want to go to the casino and spin the roulette. It's fun. You can have a whiskey and a cigar while doing it with your friends and have fun. Feel free to disagree with me in the comments, but that's not how I play. And there is so many different ways you can play the game, by the way. Like you said so well in the beginning, this is what we are doing. That doesn't mean that nobody else has to. You can go and play the game as you wish. You can go and just be a complete degen and buying dog coins, and maybe you are a millionaire. So congrats on you. But sadly, the majority of the people are going to, even on Bitcoin itself, by the way, they're going to buy the top and sell the bottom because that's how it works. They just get fear because they don't have conviction to the asset. Whether what I think they should do before they buy anything, they should study what the heck are they buying into, because there's going to be a point where the market is going to test you. It happens every single time. And if you don't have conviction, you would sell into the fear. You know how many people I've been talking to for years, and when Bitcoin was at $15,000, I was just like buying, scooping up as much as I could. I was even tempted to sell my car. I have not done it. I should have, but whatever. I needed a car anyway. And many of my friends texted me, like not even long ago, saying, oh, well, Bitcoin is up since then. I was like, yeah, but yes. I mean, I don't know where it's going to go. I don't care where it's going to go because I don't have a short-term mindset. I think in cycles, 8, 12, 20 years. So now it's time of accumulation. And there's going to be a time where I'm going to start deploying into the market whatever money I need to do whatever I have to. And like you pointed out, when you start putting Bitcoin in the center of money, so you're trading against it, well, then it becomes tricky because every time you buy a Dogecoin, you're not buying Satoshis. So that's a very good point. But is there anything you would like to say to someone who's specifically new in Bitcoin? Like, what would be your maybe bigger lesson for them?
If you're going to get shaken out every time there's a crash, you're going to lose money guaranteed based on the emotions and fear. It's just like in the last week, we've had a bit of a crash, and some people are going to sell. And I don't know what's going to happen in the very short term. Maybe it goes lower. But the point is that you're guaranteed to be shaken out. That's the one trading strategy that I know that's guaranteed to make you lose money. The problem is that when you have these kind of meme coins that have these very short-term half-life, and you don't know how long it's going to be. Like some of them last an hour, and some of them last a year, and some of them last a lot longer. But unlike Bitcoin, which is going up forever, these other cryptos they have a half-life. Like they're going to go up, and then they're going to crash. And the problem is that you don't know what that half-life is. And so I would say, I feel sort of tremendous empathy for all these people that bought these kind of, meme coins in the last few months, and now they crash 60%. And it's like, what do you do? Do you hold them or do you fold them? Because the reality is that they might go to zero, right? I mean, they will go to zero eventually. It's just a question of whether they're going to go to zero now or whether they're going to rise back up and hit new all-time highs. Or the point is that it's really, who the hell knows? And the other thing I would just say is that if you stay with Bitcoin long enough, you get this kind of interesting property, which is that you don't want to sell it because you're going to face capital gains tax. Now, the problem is that with these other coins, you have to sell them. And that's the whole point. You have to time your entry and time your exit. But then what that means is that you're guaranteed to lose 20 to 40% of whatever you win based on taxes, but you don't get it back if you lose. So you're already at because of the system, you're at a big asymmetry where if you win, you get your winnings clipped, and if you lose, you just lose. And so it's just like the problem is it's like a negative EV game, and I just look at it as from like a maths perspective. It's like I want to get richer, I don't want to get poorer. So that's why I'm not. That's why I focus on Bitcoin.
Probably the only point where we have a different strategy is that I do believe the market is going to be not entirely owned by Bitcoin. I think there's going to be a portion of the market where you will have the Ethereums, the Solanas, the whatever. There is definitely a speculation there to think about what kind of problems are they going to solve, because I don't think in my view, and maybe you disagree, maybe I'm wrong, I don't know, but in my view, they have a very different kind of angle. So I don't think Ethereum is competing with Bitcoin, not even remotely near, neither Solana. Those are completely different things for completely different reasons. And probably the market, in my mind, is going to create a bunch of different opportunities for all those coins to do certain different things. But I agree with you 100%. The best thing you can possibly do to have a clear mind and not, quote, to worry about anything is just invest in the most beautiful asset we have.
You know, as we talked about earlier, it's like, well, I could buy a house, but actually Bitcoin is like an even better savings vehicle. So it's like, well, you know, if you want to trade, you know, I don't know, it's just different things. I guess that's my point. And to your other point about different cryptos offering different stuff, I actually agree with you on that. Bitcoin is money, and then you got these other cryptos, and they might definitely offer utility. Well, they're definitely trying to offer utility. I would say it's unclear whether you know, the extent they succeed or not. I mean, I would say it's like an open question, even at this point. But the thing is that I look at store of value, wealth, money, as what Bitcoin is. Well, total wealth in the world is 900 trillion. That's a big accessible market. Bitcoin is going to get a chunk of that. Like that, I look at Bitcoin as that you hold that for 10 years, you're going to get 100x. You know, give or take a bit, but that's my mental model about what's going to happen on that. The problem is that when I look at you know, Ethereum, like decentralized compute, well, I don't know what the valuation of that is. Like Ethereum is already you know, worth what, 300, 400 billion. Maybe that's natural. Like that already seems like a lot actually for kind of decentralized applications. Like maybe that's, you know, maybe Ethereum's reached its value. I'm not trying to tell you that's what's happened, but I don't know. Like I don't. I guess my point is like I'm looking at one opportunity is like that's 100x. That's what I see. I mean, and you know, like that's just my opinion. But I look at that and I go, that's 100x if I'm patient enough.
The more people I speak to and the more I look back on what I've done in my experience and everything into Bitcoin, I can say without any shade of doubt, the best thing I could have done was buy Bitcoin. Everything else, well, we could spin off another podcast and see how bad I messed up. So I'm with you, Thomas, on that one. So if there is one thing I can say to someone, no financial advice, it's like use money you can afford to lose and do a DCA into Bitcoin. You won't regret it. On the contrary, if you want to play the market, play the altcoins, trade, well then definitely a massive, massive risk in there. But Thomas, you've been an absolute gentleman. Guys, I will leave in the comments down below Thomas' Twitter account or X account.
Thank you so much. I've really enjoyed the conversation.
And guys, thank you so much for watching. We'll see you on the next one. Cheers.